It's tax time again. More than 10 million Australians have claimed about $31 billion of work-related expenses on their tax returns so far. Many relate to working from home. The average claim made by taxpayers is more than $3,000. I'm here at the ATO and I'm going to be speaking to Assistant Commissioner Anita Challen about what you can and can't claim this tax time. Hi Anita. Thanks for making time to chat to the ABC.
Hi Nassim, great to be here today.
So more than 5 million Australians have claimed expenses for working from home so far. What are some of the things that you're looking out for here?
There's a few things to remember. The first is that you need to actually be doing meaningful work at home. That excludes things like just checking a few emails in the morning or late at night. The second is to make sure that you've incurred additional expenses as a result of working from home. That can become tricky with apportionment. So that's things like increased internet bills or electricity bills. But you do need to make sure that you're excluding the things that may be used for private purposes, like the kids using all your downloads or streaming services. And the third and most important one is to make sure that you've got the records to substantiate your claims.
And in terms of work-related expenses, car expenses are a major item claimed each year, $12 billion claimed so far. Travel, clothing, self-education, just those three categories, $7 billion claimed so far. So what are some of the things you're looking out for with these sorts of claims?
Expenses such as ordinary clothes, and private expenses aren't something that you can include in your tax return when it comes to work-related claims. And in some instances, even if your employer requires you to purchase certain clothing, it may not be deductible. Another thing to note is that generally speaking, employees who are just sort of travelling from home to work and work to home can't claim their car expenses. That is considered a private expense. And where you can claim, this year the rate is still 88 cents per kilometre, up to 5,000 kilometres if you're looking to claim those car expenses.
And people get quite inventive with the things they try and claim at tax time. What are some of the more unusual or outrageous claims that you've seen?
Yeah, we definitely see our fair share of unusual claims. We have seen a claim for $17,000 of baby expenses. So that's for the, tiny winter clothes or medical expenses, all very important, but not something that goes into your tax return. We've also seen a taxpayer look to claim $20,000 that they gifted to a family member as a tax deduction. Definitely a no-go zone in terms of putting that in your tax return. There are some smaller ones that we see as well in terms of people working from home, perhaps looking to claim their food delivery for the virtual morning tea that they're having with their team. And we've also seen Christmas sorts of paraphernalia, the Christmas shirt and novelty t-shirts and things like that for the Christmas party. They are all private expenses and not to be put in your tax return.
Another area of focus each year is rental properties. You have 2 million investors making claims. So what are some of the things that you're warning people who rent out homes or who have Airbnbs, for example?
So it is important when it comes to rental properties to make sure that you're only claiming those deductions that are relevant to the income you're producing through that property. Another good example we see is the difference between repairs and improvements. So for example, if you've got a leaky pipe in your bathroom and you're looking to fix that, and that turns into a more significant renovation where you want a new shower or a bath and a new sink, of course you can claim the costs associated with fixing the leaky pipe, but the rest might be more of a capital claim that you need to get more information on, and different rules apply.
And in terms of other types of emitted income, what are some of the things people are failing to declare?
A good example of that is where you may have had multiple jobs and you might not have captured all of the employment income in your tax return. Another example is to remember that income isn't always cash and money. It can come in kind, it can come in gifts, and you need to ensure that all of that is covered and included in your tax return.
Anita, thank you so much for your time and insights.
Thanks, Nassim. It's great to be here.